Hello again, fellow BeachBum traders. Thank you for joining us for part 1 of our weekly trading game plan for next week, the week of March 21st through March 25th. And let's talk about how to make money amid the rising interest rates. So the Federal Reserve announced liftoff on Wednesday. They're going from 0 to a quarter point in their interest rates, and now we need to figure out how do we position our portfolios and what strategies can we use to make money amid the rising interest rates, since we don't know exactly how fast and how far the Federal Reserve is going to increase interest rates. We want to be positioned accordingly. So we hope you will stick around to the end of the video. We're going to talk about a number of strategies on how you can make money amid the rising interest rate environment. So let's get started. Okay, first, if we take a quick look at how the markets ended up on Friday, March 18th, we can see all the indices were up. We can see I'm on the home page of FinViz, and as always, you can find our affiliate link for FinViz in the description box below, or in the link section of our home page at beachbumtrading.com, bum without the U. And again, we use FinViz for a lot of our market analysis, etc. So again, we're on the home page of FinViz. We can see the indices all ended up with a rally towards the end of the day. We could see we had more advancers and decliners and more new highs and new lows, but we can see under the covers we've still got a majority of stocks below their 50-day moving average and more below their 200-day moving average. So we'll look at the indices in a minute and see where they're sitting, but we had a relief rally after the Fed announced only a quarter point interest rate hike. So we had a relief rally into the end of the week, but we'll see where we're positioned in the overall market in a second. So if we go to the bottom, we can see some of the news. We see best week since November 2020, best week since 2020. So again, we had this relief rally after the Fed announced only a quarter point interest rate hike, but then we saw this rotation. The Treasury bond curve. You'll hear a lot of discussion of the curve flattening in the Treasury bonds. The bonds jumped, the yields jumped. You can see now they're over 2%. How long have we been saying they needed to go above 2%? Long time. Well, now they're achieving that. Now the question is, where's the terminal rate? And we'll talk about bonds and what we know and where we think that's going in the near and longer term future in a minute. We saw, oil has been very volatile. It ran up to 130, declined a little bit, and then it went up. We'll talk more about oil in a minute when we get to the futures. Natural gas has been kind of flat. Gold ran up and then over 2,000 and then receded a bit. And again, we see the rally, the end of week rally into the Friday and all the indices, and we'll look at the indices now in a second. Okay, let's take a quick look at the indices in more detail. So we'll start with the SPY. FinViz just entered the index ETF in the search box, and we can see, okay, here's the chart for the SPY. We can see this pivot point here. We can see it dip below this pivot point, reclaim the pivot point, and it looks like it's going up. So let's zoom out a little bit and see exactly where we are in a broader time frame. So now if we go to a weekly chart, we can see essentially the SPY had dropped down below its 50 SMA, and essentially that relief rally just came up to retest the 50 SMA. We can also see the 200-day SMA is approaching the 50. So what we're going to see in all these indices is essentially that relief rally was just a retest of the 50 SMA. They're all going to look similar, and you can see otherwise we're still below the 50-day SMA and we're declining. So if we also look at the Dow in that same time frame, again, we see that relief rally was just a retest of the 50-day SMA. So let's look at the Qs. And again, you can see, although the NASDAQ rallied hard on Friday, we can see it hasn't even retested the 50-day SMA yet, and otherwise we're in a steady decline, although we have what looks like this nice tweezer bottom on Thursday, Friday. So again, we can see all of these, they're still below their 50-day SMA, and that relief rally on Friday was essentially just a retest of the 50-day SMA, and otherwise we're still in a declining market. So we'll talk about in more detail what the strategy is for going forward. So if we also look at the IWM, which is the Russell 2000 index, we can see it's also below its 50-day SMA and hasn't quite retested. And we can also see a death cross, a previous death cross, where the 200 crossed below the 50, or vice versa. So again, the Russell's a little weak too. It hasn't retested its 50-day SMA yet. So, and if we take a quick look at the VIX, we can see after the Fed announcement, the volatility calmed down, the markets calmed down, started to rally. So we can see the VIX has started to retrace, to revert to its mean. It's dropping pretty rapidly now. So barring any other volatility events, we would expect the VIX to continue to revert to its mean, to continue to retrace down to at least this 20 level, and then possibly, down to its recent lows at 1816. So again, barring any other global events causing further volatility, barring anything else, we would expect the VIX to continue to drop and settle down. And we'll talk about, when do we expect further volatility going forward. So in general, if we go back to the SPY and talk about, what do we expect going forward, what signals are we looking for, we go again to that weekly so we can see the moving averages where we're sitting. Okay, so we're sitting right at that 50-day moving average. So, and we saw all these indices are in that position. So what we need to watch for is if we get a definitive breakout and it breaks out above the 50 SMA, and we would expect, once it breaks out, it'll probably come back and retest that line, and then if it's going to be a bullish signal, it's going to continue up from there. So we need to see, if we're looking for a bull market, a reversal of this recent downtrend, we need to see a definitive breakout of the 50-day moving average. We'll probably see a retest, and then we would see an upward trend. If this breakout fails, and it tries and then fails below the SMA again, 50-day SMA again, then we're still in our bearish declining market. So again, the next couple days are going to be critical for all the indices to tell us what market direction we're looking at. Are we looking at a reversal into a bull market again, or are we still in our bearish declining market? Given the exuberance in these relief rallies over the past couple days, on early next week, it would not be surprising to see a reversal or a retracement of this rally. So Monday, Tuesday, we may see a retracement. We would expect a test of this 50 SMA, 50-day SMA, and then the big question is, are we going to get a definitive breakout into a new bull market, or are we going to get a failed breakout and down to a bear market? So again, next couple of days are going to be critical as to which direction are we headed in the near future. So I hope that all helps. Okay, let's look at the performance of the sectors, industries, some countries, some global aspects using the Groups tab of FinViz. We're just wrapping up a video, an unlisted video, on the details of how to use this FinViz Groups tab and all the features, functionalities you can use. So I won't go into the details of how to use this tab here, and I'll put the link to this unlisted video in the description box below. So as a bonus for watching this weekly trading game plan, you can get a preview of the video on how to use the details of the FinViz Groups tab. You'll find it has a lot of functionality, a lot of power, so it's very useful. By default, we come to the sector view, the bar chart sector view that we viewed before. We can see almost everything was in the green on Friday, except we kind of got a reversal where utilities energy was which had been running, was the down sectors, and technology, which had been down, got a relief rally. So it was essentially a reversal day. If we look at the week, again, we see a lot of reversal. So we see technology rallied back. Again, this was the beaten down sectors reversed in this relief rally, and they were the positive, and then the ones that had been running, utilities energy, were down. Profit taking, etc. Essentially a reversal again. So we want to zoom out a little bit more and see the monthly performance, and we still see what we've seen for the past couple weeks, and it's utilities, energy, basic materials. And we'll talk about how do these handle rising interest rates, etc. What are the best sectors for rising interest rates, and we'll talk about that as we strategize going forward. So we can see the weakest sectors still continue to be technology. Financials, we can talk about the effect of interest rates on financials, and also consumer cyclicals versus consumer defensives. So again, I think the 1 month is more telling than the more recent, where we're just seeing reversals. The beaten down stocks get money flow, they go up. You get profit taking, and those that had run up, and so they go down. So now we'll look at the industries and some countries, some global aspects as well. Okay, another view that you'll see that we talk about in more detail in that video on how to use this groups tab is we can also view by industry, and you can see we can pick a specific industry, but let's just view all the industries and their performance over these time frames. Now again, the 1 day for Friday, almost everything's going to be green, so that's not as interesting. We see some freight logistics, FedEx had some issues, etc. We see again reversals in some of the utilities, some of the materials just on Friday. So again, if we zoom out, the week, again, mostly green, so not terribly interesting. What I want to see is the monthly. Again, the longer term time frame, what are the industries that are outperforming? And we see some interesting information here. We see uranium is the top performing industry for the month, and we see coal. So I know Money Mitch, Story Investors have been talking about BTU, etc. Coal, thermal coal. We got a solar. That's interesting too, because with the high oil prices, we are getting a reversal, and the solar stocks are coming back into favor. So again, I'll talk about as well. Well, we'll look at this. I'll show you this in a second. But I find this very useful right now because we have so much focus on the commodities. And again, at the end of the video, please stick around. We're going to talk a lot about strategies for playing the various global events going on and their effect on commodities, etc., and how interest rates affect commodities and vice versa. So just to show you a quick benefit from this, again, I'm starting to use this on a daily basis as well to look at what industries are the top performers, and then to find individual stocks in those industries that might be new. We know oil, etc., gold, silver, solar, if you're interested in solar stocks. But one I picked out recently is steel. And you can click on any of these industries or sectors, etc., in FinViz, and as you'll see in that detail video, it will take you to a screener tab and show you the stocks, the individual stocks, and it will default to the chart view that comprise that industry. And then you can scroll through very quickly through a couple different views to say, okay, do any of these look interesting. And what you're going to see, and we'll talk about more detail later and in part 2, is, okay, this guy looks interesting. So is that when it was one I didn't have in my database, didn't know about. So I did a quick view on that one and said, that looks interesting. So we'll talk about what we're going to do with some of these steel stocks. You can see Nucor, etc. Most of them are going to be high already because this is not a new trend. Cleveland Cliffs, everybody knows about, etc. But I just wanted to show you very quickly how you can use this industry view and identify individual stocks that you might want to add to your watch list or buy right away based on the outperformance in this area. So we could see, materials, etc., are still outperforming from a monthly standpoint. You can see uranium. Again, I identified a new stock to add to our database and potentially to our watch list in this sector. Just by clicking on this and looking at the screener. So we'll talk about that again in part 2, so stick around, come back for part 2, and we'll talk about what individual stocks we're adding based on this analysis. So I hope that helps, and now let's talk about some global factors. Okay, another cool feature of this Groups tab that we're starting to use more and more due to all the global events, global factors, is you can select by country. And you can see these are U.S. listed stocks from a particular country, and we can look at their performance. So again, given all the global events, and in a minute or towards the end of the video, I'll also share with you some research, some news that my partner Sonia uncovered about some additional information that may affect our views in terms of the source country of various stocks and how we want to strategize based on that due to some potential catalysts that may affect your portfolio based on the country that a particular stock is in. So if we look at a week, it's kind of interesting. We see this Uruguay is the top performer, and then we see Hong Kong, China. There was news, and again we'll talk about this when we get to our strategy. Cayman Islands is interesting too. It's financial and also these VIE, I think that's the term, where they actually list Chinese stocks are actually based in the Cayman Islands. And then we see Europe. And then we see Japan, India, Israel, etc. So this is an interesting view to see, okay, what countries are outperforming and which ones are underperforming. So we see, some of the South American countries are underperforming. So that kind of helps us. If we want to diversify globally, what countries do we want to look at and which ones do we potentially want to avoid? Again, if we look at a 1 month, we can see a mixture. Looks like some Norway, Denmark, Greece outperforming Peru, Argentina, etc. And then the worst performers for the month are Singapore, Hong Kong, and China. So again, over the week, we saw this relief rally with the China, Hong Kong stuff. They said, yeah, okay, we're going to, and we'll talk about this more in a minute. Yeah, we're going to play nice with the U.S. markets, etc. We had this short-term rally, but over the course of the month, they're the worst performers. So again, we'll talk about our cautions in those areas. So again, we're starting to look at this view, and we want to keep an eye on this going forward and say, okay, if we want to diversify globally, where might we want to do so, and what other countries might we want to diversify into, and which ones do we want to avoid? So I hope that helps. Okay, I also want to do some quick market analysis using Webull. So I'm on the Markets tab of the online browser version of Webull. And right now, Webull is offering 5 free stocks if you open and fund an account with Webull. So if you don't already have Webull, right now, again, you can get 5 free stocks. You can get the link to Webull in the description box below, at our YouTube channel at the top, or in the link section of the About page below, or in the link section of our home page, beachbumtrading.com, bum without the U. So again, take this opportunity to get 5 free stocks. Normally they have 2 or more. Right now they're running a deal for 5, so hopefully you can take advantage of that. Again, we have a more detailed video about how to use this market screen, so I'm not going to go into that in detail. I just want to take a quick look at how we ended up on Friday. We can see advances to decliners was about 2 to 1 or so. We can see the majority. Again, I like this histogram view so we can see, okay, not only how many advances declined, but what was the magnitude of the advance or decline. So again, most of the advances were small. We can also see the inflow, the money flow in or out, and we saw on Friday in particular, we saw a major reversal and money flowed into the NASDAQ and not so much in the New York Stock Exchange, which again, for some time we've seen money flowing out of NASDAQ. So in my humble opinion, again, this is not financial advice, is for educational purposes only, but I think this was just a reversal of the trend we've been seeing. So I wouldn't put I'm not putting a lot of stock into that at this point for a longer term. So the other thing I want to look at is just the best performing industries very quickly, and ETFs, etc., to kind of get a feel for the trend going forward in the next week. And we're going to see mostly green. Because we had this relief rally, so we see mostly green. Leisure, that's interesting. Equipment was healthcare, didn't really outperform that much. Paper, we saw that in the industry sector. We saw a major reversal also in semiconductors. They had been declining. Again, I think that was just a reversal, a relief rally. Financials did okay. So now let's look at the ETFs very quickly. See the indices we would expect right now up. Yeah, I mean VIX is going to be down. Yep. Yeah, right now they're all showing up. So again, until we see whether or not we're going to get a real breakout, a definitive breakout on the indices, or a failed breakout, it's hard to tell which direction we're headed right now. So we saw industrials. Okay, so here healthcare did okay. Communication, again, that was a beaten down sector. Energy was mixed. Utilities was down. Again, that was a reversal. Consumer cyclical was very positive. Basic materials is still positive. We see lithium. That's interesting. That's EV oriented. We saw the reversal in technology. Consumer defensive was positive. Real estate positive, and again, in a minute we're going to talk about the effect real estate. What role does real estate play in fighting the increasing interest rates and mortgage rates versus regular interest rates and inflation? So if we go to commodities, precious metals, again, aluminum. And again, we'll talk about store of value, precious metals as a way to fight rising interest rates and inflation. And we saw, okay, aluminum and softs, which is cotton, etc. Coffee. So that's interesting. Now let's see where the bonds are. Okay, 25 years zero coupon was the top, extended duration. Okay, so the long end of the curve was very positive. 20-year TLT was very positive on Friday. So the long end of the curve was very positive on Friday. So now let's go back and we'll look at the futures, and then we'll apply our strategies, and then how we're going to pick stocks going forward into next week. Okay, if we just do a very quick review of some of the highlights of the economic data that come out this week, we see on Tuesday we had PPI, which is Producer Price Index, which is an inflation measure, was slightly lower than expected. And so that means producer inflation feeding into consumer inflation was decreased, so that's kind of a positive for decreasing inflation going forward. On Wednesday, we got retail sales were a little bit weak. That's a negative. Maybe the consumer spending is waning and there's some concern there. And then the big news was the rate hike, the Federal Reserve rate hike. And again, they decided to do a quarter point. They talked about 7 rate hikes expected in 2022, essentially 1 per meeting. So if that were the case, we would expect a 0.25 to 0.5 per meeting. The expectations right now that people are talking about for the terminal rate is that it would reach 1.9% in 2022 and 2.8% in 2023. So we can see a significant rise and steady rise in interest rates going forward, and so we want to plan and strategize based on this steady rising interest rates and reaching almost 3% as of the end of next year. So again, this is where our strategy needs to be, is okay, how are we going to make more than this 2% interest rate? And then we saw most Fed officials expect that the rates need to stay above neutral throughout 23 and 24. So once we get up to this almost 3%, we're going to stay there for at least 2024, barring other events. Now, one of the disappointing, in my opinion, things that did not come out is they did not talk about their quantitative tightening plan. They said that's to be decided at a future FOMC meeting. Maybe the next meeting, in April, or even beyond that. So we don't know what the effect's going to be on them unwinding their balance sheet, selling off bonds, or just letting them roll off, etc. So we don't know that yet. So we can't really definitively plan on how to play bonds, but we can plan on the fact that we're not going to get any definitive further news, at least for another month. And then another positive that the markets really reacted positively to was Powell's answer to the question about if he sees recession risk. And he said he did not see significant risk of recession. The markets took all this as positive. They were expecting a 0.5% rate hike. They only got a 0.25, and so the markets rallied for the rest of the week, and the VIX declined. So again, this was all received very positively, and pretty much not much else mattered at that point from economic data standpoint. Jobless claims data on Thursday was better than expected, so that, again, positive for the economy, reinforcing the Fed's decision that the economy is strong enough to handle rising interest rates. Now, again, then we'll talk about how can our portfolios handle the rising interest rates. So we saw that data. Again, you can see this in investing.com in the economic data news calendar. And I've also started posting this data as it comes out in the Surf the Markets report channel on our Discord. So as this economic data comes out, typically I'm getting it from that economic calendar on investing.com and pasting it into the Surf the Markets report channel on our Discord. So if you're not a member of our Discord, you can find invites on our YouTube channel About page, in the description box of this video, on the link section of our homepage, etc. So as this comes out, again, I will post it to our Discord, and you can be notified of the results of that economic data in near real time. So I hope that also helps. So if we look at just next week, it's pretty standard data. The only thing I wanted to point out is these Fed FOMC members have various talks, and based on what they say, if they come out more hawkish, or if they talk about the quantitative tightening plan, we might get some volatility if they go against what the decision was, or if we can get further signs of how fast interest rates are going to rise, how fast are they going to tighten, etc. So you might want to keep an eye on these various Fed official speeches and see how the market reacts to them. We can see we've got several, one or more almost every day next week. And then we get consumer sentiment. That might be a little interesting as to how that's received, but otherwise pretty standard economic data for that week. Okay, let's take a real quick look at what the futures are telling us in terms of where things are going. So I'm on the futures tab of FinViz, and we can see, okay, the indices, this is an interesting view because we can also see the Dow broke above that previous high point. So did the S&P, and the NASDAQ is just kind of testing it. Russell kind of broke a little above, so we can see that positive relief rally. Now the question is, are we going to continue upwards, or are we going to retrace? I wouldn't be surprised if we got a retracement. We take a quick look at the VIX. We can see it's retracing, reverting to the mean, coming back down. So barring other events, volatility events, we would expect it to come down to that 20, 18, 16 levels. So we're leaving, and we'll talk about this in part 2. We always leave a buy out there to catch a unexpected spike, but otherwise if we see it revert down in here, we may go long volatility into the next FOMC meeting. So then we saw oil decline. It peaked up above 130, declined, bounced back. Essentially, I think that's just a reversal as well, waiting for further clarity on global events. We'll talk about that in more detail in a minute. Again, we see natural gas it's been kind of neutral in the middle here, so we haven't really been taking positions. You can take short-term positions in here and make money, day trade, etc., or a couple days, but we haven't been focusing on that. See, gold ran way up 2060 or so, and then it retraced and then bounced back up, sitting just below, I guess, 1900, around 1950 right now. So same way with silver. Again, commodities have been strong. Precious metals are strong. Again, they're a store of value. We'll talk about that. Hedge against inflation. We've been long gold and silver for a long time. So we'll talk about opportunities in those areas as well. All the commodities ran up with the Russian war in Ukraine. We saw, wheat went asymptotic because of the Ukraine's supplying the globe with wheat and corn, etc. And we see it since come down in kind of steady oscillation. So again, commodities all ran up. Now this is interesting because this is the bond behavior after the FOMC meeting. We see it was prices were declining into the meeting, and then they kind of bounced, and it looks like they may have stabilized. And again, now that we have a decision, we don't know what the quantitative tightening plan is until the next meeting or subsequent meetings. We can kind of expect that these are going to stabilize, and there may be a short-term opportunity in the bonds area, and we'll talk about that in more detail as well when we get into part 2, and how we can play that going into another FOMC meeting and then longer term. So I hope that helps. Okay, so hopefully that gives you tons of information as input to your stocks to pick for next week, the week of March 21st through the 25th. Let's talk about just some other trends, themes, strategies as to, again, how to pick our stocks for next week. So a couple other factors to consider are, you've heard companies pulling out of Russia due to sanctions, due to the economic and political situation. Think about if a company that you own or are looking at buying, are they going to be impacted by the loss of business in Russia? Or if they're pulling out, McDonald's, etc., are they going to incur additional costs that are going to impact their earnings, etc.? So consider that in your stock picking analysis as well. Also, companies at risk due to potential Russian default. Russia has to pay bond payments to a number of companies and countries. Uh, for example, Vanguard was holding and had a bond payment they needed to get. And if Russia doesn't pay, who's that going to impact? So, my personal opinion, again, is just my opinion, is that the reason they let Russia pay these bond payments is that we have U.S. and NATO countries that are holding these bonds, and if they don't get their payments, then that impacts their business. So, but if Russia defaults, that's going to have a negative impact. So another something to consider. Now let's talk about oil in more detail. This is a lot of research that, again, my partner Sonia uncovered, and I think is important to note as the potential impact on oil. Is they've been, running it up, saying, oh, the Russian supply is to get taken off the market. Well, not really, because India, China, Germany, and several other NATO allies are still buying Russian oil. So it's not off the global market. They're buying the Russian oil, which means they're not buying from Saudi, UAE, etc. So that Russian oil is really not off the market. So my opinion, again, once people realize that, it may have less of an impact on oil prices. So again, something to note and consider. We're expecting oil prices to eventually drop. There's also talk of lifting the sanctions on Iran and letting them pump oil. There's talks of Venezuela. So there's additional supply opportunity catalysts that would drive the price down. Now again, we might have short-term spikes in the oil price, but eventually I think it will come down. So another interesting note is that India got 3 million barrels of oil from Russia at a 20% discount. So given that, you would expect India to keep buying their oil from Russia, and they have a need for 5.15 million barrels of oil per day this year. And I will include a link to this article that Sonia found that describes all of this. So again, India is more likely to be buying a lot of that Russian oil. Now, another thing that came out of that, in addition to a risk of sanctions on India due to them buying Russian oil, which Russian oil is supposed to be sanctioned, is the U.S. is also considering sanctioning India for purchasing Russian military systems. And the fact that Russia supplies the majority of India's military hardware. So again, there is a risk of sanctions now on India because of their relationship with Russia. So I wanted to mention that. I thought that was an important piece of research that Sonia found that tells us we need to be careful of companies in India. They might get sanctioned. And we want to keep an eye on that, as well as this impact on oil. It was also interesting that Germany is still buying oil, even though and other NATO allies are still buying Russian oil, even though it's supposed to be sanctioned. So another thing we noted was sanctions on Russian diamonds, so several jewelers are not buying diamonds from Russia. So another thing to note is there's also a large supply of industrial diamonds that comes out of Russia because they're lower cost. So companies like 3M, Norton, again, Russia, Sonia has direct experience working with these companies. So they buy a lot for diamond wheels, etc. They buy Russian diamonds. Well, if that's sanctioned, they can't buy Russian diamonds, and they have to buy more expensive diamonds from somewhere else. So what's the impact going to be on those companies? So again, something to consider. Also, companies impacted by outbreaks and shutdowns in China, like Apple, Tesla shut down their factory for a while, more supply chain disruptions, etc. So again, all of these things, I bring these up because it's important to consider when you're picking a stock. You want to consider this. Is the company you're picking going to be impacted by these various global factors? Then we've got, rising interest rates. a warning I wanted to share with our fellow traders is you need to realize that rising interest rates from the Fed Reserve means things like credit card interest rates and margin balance interest rates are also going to go up. So if you are carrying margin balance on your trading account, you might want to start paying that down, selling what you need to sell to get out of that margin balance, because that interest rate's going to go up, and you don't want to be in a bad position because of the interest rates on your margin balance. So please consider that. So the other thing we'll talk about, or at least let's think about, and I'll probably post this in the comments so we can talk about it. I'll post it in the Discord. We can have further discussions. Is, do we expect Treasuries to find a stable bottom for a month before the Fed announces their quantitative tightening plan? So again, I'm looking at these TMF, TYD, etc. And so let's discuss this in the comments and in the Discord if we think that that's an opportunity to play right now until we get quantitative tightening. And then, what other sectors do you all recommend? We'll talk about that again in the comments, Discord. Here's some that I'll throw out there I think are good to make money. Fighting the high interest rates, the rising interest rates, is, high dividend aristocrat stocks. We own Realty Income. There are others, what they call dividend aristocrats like IBM, that steadily increase their dividends, have held their dividends for a long time, and you're starting to see, I think, money flow into this area because of that. So the prices are increasing because there's money flow in there. Precious metals, store of value. We've talked about this for a long time to fight inflation, fight interest rates. Is precious metals, gold, silver, platinum, etc. REITs that are not sensitive to rising mortgage rates. You want to, in my opinion, you want to be careful that if there's a negative impact due to rising mortgage rates, that the mortgage rates have already increased, are going to keep increasing with the increasing Fed rates. So some examples of REITs that we like is, again, Realty Income. They're in retail space. Stag we own. They're an industrial REIT. LTC is a healthcare REIT. So again, they're not really sensitive to mortgage rates as much. Others to consider is company with pricing power. If they can pass on their interest rate increases, inflation increases to the consumer, then they're not going to be as negatively impacted, like necessities, food, diapers, anything people have to buy, they will absorb increasing cost out of necessity. Another question that I've been talking about is, are the credit cards and buy now, pay later? This is a quandary because they're going to make more money as interest rates increase. They're going to make more money, more profit on the interest payments. But is that going to cause an increase in defaults? Are people going to get totally over their head, underwater on their debt because of the increasing interest rate payments, and then they're going to default? And is that going to negative? I think short term it may be positive, long term may be negative. So again, that's something we can discuss. So I know there's a ton of information. It's probably a little long, but there's just a lot to consider right now, a lot going on right now. I wanted to give you all this information to as input to your stock picking, and I hope that you will come back tomorrow and see how we have incorporated all this information in the stocks that we're going to put on our watch list for next week, the week of March 21st through the 25th. So thank you again for joining us for part 1, and we hope you will come back for part 2 tomorrow. Please smash the like button so the YouTube algorithm will share this with more traders around the world. If you like this information, please let us know. If we can make improvements, please let us know that. We hope you'll subscribe to our BeachBum Trading YouTube channel and follow us on social media. You can find all the links in the description box below, on our homepage, etc. So thank you again for watching this video to the end, and we hope to see you tomorrow for part 2. The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We also cordially want to invite you to our new BeachBum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch list, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You can also find a link in the social media category on our web page, beachbumtrading.com, without the bum without the U, and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. And let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week. Bye. If you like this video, we hope you will choose to subscribe to our YouTube channel by clicking on the box in the upper left-hand corner. You can watch another video like this by clicking on the box in the lower right-hand corner. And we have a whole playlist of videos like this that you can access via the box in the upper right-hand corner. Our latest video is available in the box in the lower left-hand corner. We hope you like this and have a great day.